Welcome everyone, this is John Sheely. I'm going to share with you why our live trading room is so popular. It isn't just because we frequently call trade for several popular financial commodities. I'm a Day Trader members love the research, the education, and of course the fellowship. Let's take a quick look at the feel and environment of our trading room. But as you know, we must review our risk disclaimers. Trading carries a high degree of risk, and trading may not be suitable for all persons. Past returns are not indicative of future results. Please review our risk disclaimer very carefully. Additionally, I place our hypothetical disclaimer as well. In IamADayTrader.com, we create a great amount of research and the creation of indicators and strategies. Like other research firms, we use hypothetical data to create our discoveries. Please review our hypothetical disclaimer very carefully. Our moderators do not just call trades. We make sure that our members understand why we make the trade. As you can tell, it is the education that is the key.
So we're quite possibly heading down to the low of the day. So I have gone to break even on the second contract, gone to break even +1, and we're out of that trade, out of that 34B. So what's interesting here is you had a T20, okay, so you can see where the 8 went up above the 34, it crossed back over, and effectively this 34 bounce was a T20-1. That is, it's just to explain that setup again, you had a T20, it was your first pullback, retracement after you had your T20.
Of course our members know we have winners and of course we have losers.
That is targeting 5 ticks on the first contract and 8 on the second. Now I used a market order there, by the way, and I got a tick slippage. Now, one of the money management techniques you can use is if you're, say, taking or going to the market like I've gone, they're going for 5 ticks on the first contract. You can either leave a stop where it is or even consider lifting your stop up and lowering your risk. Now, I think we just hit, what do we hit? Do we hit +4 then? The other thing I'm looking at here, you can see the long-term stochastic, which happens regularly. You can see here it's sort of rolled over. Now, of course, it can flick back up again. Okay, so we've entered this on a 34B. I don't like the look of this. You can see here we've got a T10 setting up. Notice how our long-term stochastic is rolled over. Now that effectively is what I call the T9, where you've got a lower high set up there. Now I'm going to stick with the trade. So you can see here you're within 2 ticks of forming a double top there. Now this is where time comes in. Normally speaking, you just want to be concerned about time. Well, we've still got 25 minutes for pit open, but we'll usually start to see some volume start to increase very soon. I'm just going to leave my stop where it is, but it's not looking good. T10, as a reminder, is when you've been overbought, you've rolled over, short-term stochastics come up, kicked over. It's also known as a money on the floor trade. If you look over at your anchor chart,
our members can follow our trades from the beginning to the end.
So we're short on this 200 bounce. We want to see some follow through. You don't want to bounce it. Come on, keep going. So one of the things I liked on this one, as much as I'm really suspicious of this market right now, is we had some divergence in the direction of our earlier trend. As long as it continues, now of course this may turn into a 34B, which is what we don't want it to do. A lot of stalling, a lot of hesitation at this level. A lot of hesitation, traders. I'm going to break even +1 on this trade. The reason being is just too much hesitation in this area for me. And it's what I'd normally do. When I've got this hesitation, I go to break even. Now it may very well follow through, but it could pop back up. So we're out at break even on this trade.
And of course, by the end of the day, we review our trades and answer any questions from all of our members. All right, everyone, let's take a review what I did today. I went short. Actually, before our session, I was looking for a decline, but instead, I've quickly covered this particular trade because some of their other information that we had in regards to the equity market, the currencies, and even gold was giving me some confusion as to the direction for all of our financial commodities, so I went ahead and just scratched that particular trade. We were now coming down and we were now breaking out of all this support. So I attempted to go short even though we were under this particular moving average. But instead I got a stop loss and prices began to move up. I went ahead and went long because the moving averages were now moving up very strong. So as soon as I saw this strength of trend, I went ahead and put a stop loss, and I did put it just underneath this swing low. I actually gave it a fair amount of distance, almost 10 cents. So I went ahead and just hold that position, and you can see the highs that we saw in these swings. So I went and took profit only if we had broken these highs, and prices moved up very vertical, and I went ahead and closed that trade. Now, as you know, we're also looking for a very solid bull trend here. The prices began to move up. I went ahead and went long, but unfortunately, as we know, corrections can be sometimes larger than anticipated, and I had a loss right here. Prices went ahead and I waited until we had a decent pullback. We got underneath the 200 period moving average. I went long and took profits here. I actually made a little bit more than I had lost in the previous trade. So as you can see, I'll show you the three trades that I had. It's kind of the good and the bad and the ugly. I went long. The moving averages were beginning to get moving up, and I was looking for also a breakout of these highs, and I was stopped out. But when I saw immediately 2 bars left and the moving averages were fanning out, I went ahead and took long. And I must admit, I should have just held that particular trade, but when it began to just stall, all these 5, 10 bars, I went ahead and just took the profit on that particular trade. Instead, prices moved way up. I went long because the equity market was approaching 930, and it was actually moving very solid, and I think it would help us pull our crude. Instead, it come back a little bit. It did set a new high in regards to this swing, but we're still not toward 930, and instead price just went sideways. So I went ahead and scratched this trade, took a little bit of a loss here, and waited till seeing a better trend. Once again, prices fell down to the 200 moving average. I went long, and it's actually because it broke out of these swing highs right here, and I went long, and this was a nice little quick profit. I entered again, but the reason I actually took a little quick profit here is because I realized then that the price began to sit into this area of the price. So I went and scratched that particular trade. When it began to break out of this price zone, I went ahead and took long again, but it didn't cost me much. It was only about a $50 loss. And then again, I waited until I see some trend. And sure enough, we had a big decline, a very weak rally. So I went ahead and went short, and I took a quick $50 trade. That basically paid for the loss that I had previously. So I'm basically building up a very small positive day, and so I'm waiting for some good trades here. Now, as you see here, I waited until, again, the moving averages are moving back up. It was a very solid bull trend. I entered. I was actually looking for a much larger profit objective this time, but instead prices began to fall down, move sideways, so I went ahead and took profits here. That was about an $80 profit. Now, I admit I probably should let this go on, but I wanted to continue having a positive day. Again, the moving averages were telling me that the trend is still solid, especially on the 200. I quickly made about an $80 trade here because I wanted to build up for the day, and I probably should let it go, but I knew that I would try to do that when I have a better trend. And then, as you can tell, this was the trade I've been waiting for. We had many things in our favor, primarily from the equity market. It was helping us pull the accrued from time to time. I went ahead and took this particular trade. It was actually based upon the 5-minute chart, the 15-minute trend, as well as our anchor chart of the 610. I took this trade and I was not looking for a small profit objective. I waited until the entire highs were violated. In other words, we were looking for the high of the day. This was about a $150 trade, so as you can tell, it basically made my day. We had an excellent day for trading. Does anyone have any questions about the trades I had taken? I can't even scratch the surface of what we really do for our members. Every day I discuss real research using decades of experience from our moderators. What you're going to find in our room, the best research, the best education, and the best fellowship that you'd ever find in a room. Just watch our live room for just 1 month. Just do it 1 month. And what you're going to find out is that you are about to become a long-term member. This is John Shealy as Director of Research and Development, and I'mADayTrader.com.